Hello traders, Gary Wagner here. Just about 11:40 in Honolulu, 4:40 in New York. It is Thursday, December 26, 2019, and this is the Daily Report for Gold and Silver. Gold, as well as the entire precious metals complex, continues to run and gain value on the upside, with gold having double-digit gains today. If you recall from Monday's show, we said that we might not do a show on Christmas Eve, the day of Christmas Eve, unless there was some substantial activity. And we certainly saw that with double-digit rises just the other day. Of course, following Christmas holiday, when the markets reopened overseas, we saw a little bit of movement and felt that this was the opportunity we had been waiting for to enter a trade from the long side. We did enter a trade. The market was trading at roughly 1507 and closed above that. We'll talk about that when we pull up our price board. But the key was that it had traded above the three critical levels we were looking for: the 50, the 100-day moving averages, and the compression triangle that we identified a couple of weeks ago. Let's take a look at current pricing and then to our technical studies. Over the last couple of days, we have seen both the U.S. equities markets as well as the precious metals markets move higher in tandem. Some are even calling it the everything rally. When we look at gold, that gained $11.20 today. We did send out a special trade alert. Yesterday, it came out at about 9 in the evening for the East Coast, of course, a little bit earlier for the rest of the country. I tried to put it out at a time when everyone could act upon it, and we got long at 1507.50. We'll talk about that as well as our stop placement and upside target when we pull up our technical studies. Platinum also gained on the day, $9.20, $9.52 is current price. About a full percent gain, $16.70 in palladium at $1,868.50. And then silver gained about 12 cents, just below $18 at $17.97.5. Slight tailwinds from a modestly weaker U.S. dollar. Let's take a look at our charts and talk about our current trade. There is no doubt on a technical level, we had a significant breakout to the upside, ending almost a month and a half of a sideways trading range that was defined by approximately 1450 on the bottom and approximately 1480 on the top. We talked about the fact that for us to enter a long position, we really needed to see a couple of things happen in terms of a technical market. And we defined this pennant formation, and I felt that that was the key to watch. In other words, we needed to really see a break above that. But before that, we first had to break above the 50-day moving average. 50-day moving average had really created a resistance level that the market was unable to close above for a couple of weeks. Now, when we take a look at the most recent activity in the market, and we're looking at about the last 3 or 4 days, what we saw was as follows. On Monday, we saw the market itself move up, but move up ever so slightly, but for the first time close above the compression triangle that we identified, and the day before it, it had closed above the 50-day moving average. Then we had the 23rd, that is this candle right in here, and we saw double-digit rises. And what was so significant about the rise on that day was the fact that it broke through not only the 50-day, the pennant formation, the 100-day, but also above the 23.6% retracement hanging out at around 1497. Those were the four things that we needed to see happen before we actually triggered a buy signal. We did that last night, just following the conclusion of Christmas when the markets reopened overseas. The markets were trading up about $2. That's this candle right here. And my sense was that we would see a significant rise. And because of that, we entered the market at 1507.50. Market, as I said, is currently roughly around 1515, 1516 in that area, while we acknowledge that we have some minor resistance at the level of 1520. that would be this top right here, and then some minor resistance at about 1540 based on this top right here. There really isn't any major technical resistance until 1565, which is the record high this year. And I think that that is where the market has a high probability of running. Now, in terms of placing our stop, we placed it just below the low that was achieved here on the 23rd, and we will maintain that stop currently, as well as maintaining our current long position. We finally got the Christmas rally that we were waiting for, and we're able to act upon it. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.